It is 12:25 p.m. Pacific Standard Time. It is the 7th day of January 2026. This is episode 1233 of Bitcoin, and I am late today. Sometimes things just get in the way. There's not much I can do about it. So apologies for the lateness of the hour, but hey, we're going to do all the news that you can use about Bitcoin and more. MSCI. This whole, are they going to delist MicroStrategy? Well, we've got word as to what's going to happen. They seem to have made a decision, or at least, well, they've made a decision about a decision. Well, I won't say more until we get to it. A stablecoin, Tether, the company, they're making a push for gold. Yeah, we'll get into that one, I promise. And then the Brazilian central bank, real peg stablecoin with yield sharing. And of course, as always, you should always ask yourself, where does the yield come from? And then, well, Tether is going to be in the news again, this time with Rumble. They've made an announcement, and we're going to get to it. Remember yesterday we were talking about the violation of Trump's executive order by the U.S. Marshal Service? Well, the U.S. Marshal Service has decided to drop a statement. And then BTC Inc., the parent company of Bitcoin, the Bitcoin Conference, Bitcoin Magazine, blah, 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 blah. They have standardized their Bitcoin operations, like their, how they get money, how they pay money, how they work with their vendors. It's all been standardized. That's news because of who it is they're working with. And it's good news. It's they're not working with a shitcoiner. They're working with somebody that is one of the dearly beloved in the Bitcoin space. And then finally, at the end of the show, we will finish up with Bitcoin mining chasing AI. Yeah, well, yeah, you'll hear all about it and more. That's why you're here on the Bitcoin and podcast. Let's get to the big news of this morning. Well, for me, it's this afternoon, and for y'all, it'll definitely be the afternoon. MSCI will not exclude Bitcoin treasury companies like Strategy from global indexes. And this is Micah Zimmerman writing for the aforementioned Bitcoin magazine in a major development, at least for Bitcoin-focused corporations and the broader digital asset ecosystem. Global index provider MSCI has concluded its review of digital asset treasury companies and decided against excluding them from its flagship indexes. MSCI said the current treatment of affected companies will remain unchanged for now, meaning the DATCOs, or digital asset treasury companies, already included in MSCI indexes will indeed stay included as long as they continue to meet existing eligibility requirements. Sounds like sounds like a pressure release valve in case things get hairy for MSCI. So I'm not all that thrilled about this statement because that's ambiguous, right? Okay, what if they just change the requirements again, the eligibility requirements, or this whole notion that they've decided against excluding them from their flagship indexes for now? You see, I don't like this. It's okay, but it's like, just make a decision. How hard is this? Just make a decision. Did the traffic light turn green? To put your damn foot on the gas. Go through the intersection. This isn't hard. But continuing on, MSCI the index provider, MSCI, acknowledged feedback from institutional investors expressing their concern that some digital asset treasury companies resemble investment funds, which are typically excluded from its indexes. Well, at the same time, MSCI said distinguishing between investment-oriented entities And operating companies that hold digital assets as part of their core business requires further research and market input. As a result, MSCI said it plans to launch a broader consultation on the treatment of non-operating companies while deferring any exclusions, additions, or size-related changes for DATCOs in the interim, according to the company announcement. The move reverses fears. No, they don't. They don't reverse any fear whatsoever because everything is still hanging out in the wind to twist. Just read the freaking language. But this story says the move reverses fears that have swirled in financial and crypto markets for months that firms like Strategy, holding a majority of their assets in Bitcoin and other digital assets, could be stripped from widely tracked global equity benchmarks like the MSCI All Country World and emerging market indexes. The proposal, which was first announced by MSCI late this last year, would have effectively classified DATCOs, public companies with greater than 50% of assets in digital assets, as fund-like entities rather than operating companies, and thus become ineligible for inclusion in its core indices. That framework ignited fierce criticism from industry players and advocates. Strategy, the largest publicly traded Bitcoin treasury company, and other DATCOs had been at the center of the debate. Strategy formally urged MSCI to scrap the proposal, arguing that excluding firms based on asset composition alone would be misguided, arbitrary, and could destabilize index neutrality. In an open letter to the MSCI Equity Index Committee, Strategy stressed that DATCOs are operating companies and not passive funds. They should not be judged solely on balance sheet Bitcoin holdings. Industry coalitions such as Bitcoin for Corporations also mobilized support, framing the move as discriminatory and warning that exclusion could trigger billions in passive outflows and broader market dislocations, while analysts had projected potential capital flight of up to $2.8 billion from Strategy alone if MSCI followed through with exclusion. Broader estimates of forced sell-offs across crypto treasuries might range much higher. Well, the decision ends that uncertainty. No, it doesn't. No, it does not. Oh my God, excuse me. It does not end that uncertainty. There are several times in this article itself, there are uncertainties. There are at least 3. God, my God. But continuing, it preserves the status of DATCOs within MSCI's suite of indexes and avoids triggering index-linked passive selling that had loomed as a structural market risk. Market reaction was swift. Shares of digital asset heavyweights, including Strategy, saw immediate relief buying. Shares of Strategy jumped over 7% after the news broke in after-hours trading. So that's the end of the article. Nothing in this article assures anybody, anywhere, at any time that MSCI isn't going to, next week, start threatening this shit again. This fucking thing was FUD. Perpetrated at the highest levels of the TradFi world. They rattled their saber and they got people to sell. Not only did they sell Strategy, not only did they sell Strategy's other products, they sold Bitcoin. These people are going to do it again because the weak hands are all over the place. This is ridiculous. There's no spine, there's no ball sack, there's no nothing. Nobody has the competence to effectively hold on to their Bitcoin, save a very few people, because they don't understand the asset, because it's not an asset. Not really. That's not what it was designed for. It said nothing about being an asset that I read anywhere in the white paper. It's peer-to-peer digital cash. It's not an investment. It's not an asset. It is cash. Why people view it as an asset is simply because number go up. And that really that really is one of the most damaging features of Bitcoin itself, is that it gains in value comparative to fiat currency world and real asset world, right? And I'm not saying that numbers shouldn't go up. There's no way it can't go up. As currencies in the world just become continuously debased and flushed down various toilets, of course that value is going to flow into Bitcoin. So there's no way you can stop number go up, and I don't want to stop it. There's the only thing that we have is, how do we educate the masses that this is more than an asset? In fact, its assetness is at the end of the train. It's like the caboose that is the freight train that is Bitcoin. Well, I can guarantee you we're going to see MSCI FUD again. People are going to sell their strategy stock again. They're going to sell Bitcoin again. There will be outflows of Bitcoin ETFs again. And just as a cherry on top of the frickin' sundae, number went down today and yesterday because, well, whenever this got announced, which I think was early this morning, but we immediately saw price go down because sell the news, right? I swear, traditional financial people are just making me sick. The whole attitude of, oh my God, they actually released a statement on this asset, sell it. Why do you want to sell it? Oh, because there's news. But that, wait, that doesn't make any financial sense. No. When I say sell it, I need you to act older than a 4-year-old and get on the phone and sell the asset, because me, the big boss sitting here in the suit, in between writing stupid ass mission statements that don't say a fucking thing, wants you to sell it. That's how I make my decisions. News comes out, sell it. Is it a rumor? Buy it. Is this really how we make our decisions? Oh my God, no wonder the world is a clown show. Then we come to Tether. And I don't hate Tether, but I might by the end of this article from Decrypt, written by Andrei Bogonsky, stablecoin titan Tether wants gold to be used for everyday payments. Here's how. Tether moved to establish a new unit of account for gold on Tuesday as the stablecoin industry leader argued that transactions denominated in Scudo, SCUDO, could simplify the precious metals use in everyday payments. Pausing to say, just use Bitcoin. But under the stablecoin issuer's definition, one Scudo, oh God almighty, would equate to 1/1000th of a troy ounce of gold, as well as its XAUT token, which is valued at $2.3 billion, according to CoinGecko. The token's market cap has nearly quadrupled over the past year. In a blog post, Tether acknowledged that demand for gold has been bolstered worldwide by persistent inflation concerns, heightened interest rate uncertainty, record central bank purchases, and growing demand for safe haven assets. Again, just buy Bitcoin. Although a lion's share of the firm's products are pegged to the US dollar, it described those factors as an opportunity to restore gold to its former status, a universally accepted medium of exchange that can't be devalued by a government's ability to print money. The company added that its wallet developer kit can help support XAUT on virtually any device. Tether noted that Satoshi is already used in a similar way to Scudo as a way to refer to the smallest unit of Bitcoin, or one 100 millionth. Yeah, 1/100 millionth of a Bitcoin. One Satoshi is currently worth around $0.001, while one Scudo would be worth roughly $4.48. Tether's term dates back to the 16th century, apparently. More than 400 years before the first version of the internet was developed. Scudo was used to describe a variety of coins in Italy, likely hammered from metal blanks. The term was derived from the Latin word for shield. It's interesting. The parallel with Tether's logo may be coincidental, but CEO Paolo Ardoino and CFO Giancarlo Divascini, I can't pronounce these names, were both born in Italy. And last year, Tether acquired a minority stake in football club Juventus, one of Italy's most storied soccer clubs. An all-cash offer to buy a majority stake in the team was rejected last month, however. Tether said that its introduction of Scudo does not change the fact that gold backing its XAUT tokens is held in secure vaults. If an individual would like to redeem their tokens, the company's website said it can deliver gold bars to any physical address, at least in Switzerland. That's not all that helpful. But according to Tether's website, XAUT is backed by 1,329 gold bars equivalent to 16.2 metric tons. The firm published its first attestation report from BDO Italia for the token last April, which did not comply with international financial reporting standards because it did not include primary disclosures and statements from the stablecoin issuer. Tether's critics have called on the industry's leading stablecoin issuer to receive independent audits for a decade at least. In April, Ardoino said on X that XAUT was gaining important traction in emerging markets. Tether also offers a token called Alloy, which it bills as a tethered asset. By pledging XAUT token, the company says customers can receive a lesser amount of USDT tokens, which mirror the functionality of its $187 billion stablecoin and are also pegged to the United States dollar. And a few months before Tether's XAUT debuted, stablecoin issuer Paxos began offering PAXG, the first digital asset that could be redeemed for gold. The token's market cap stood at $1.7 billion on Tuesday, while tripling over the past year, according to CoinGecko. Paxos, which also issues PayPal's Pi USD stablecoin, said PAXG would become the only institutional-grade gold token issued under federal regulatory oversight following the Office of the Comptroller of the Currency's approval of a national banking charter just last month. Tether's XAUT may be worth $2.3 billion, but the stablecoin issuer says it owns much more gold than that. The firm said it held 116 tons of gold as of the end of the third quarter of last year, with that tally valued at nearly $17 billion as of Tuesday. God, not all that happy here, because and here's the reason why. It's not just because they're not talking about Bitcoin this way. If I have a token that's backed by gold, how do I know the gold's there? I mean, sure, we can audit it. Is the gold there between the audits? Because honestly, the only time, this is like a Schrodinger's cat thing, right? You put a cat in the box, you put a trap that's also in the box that if it is, I don't know, hit by a cosmic particle from space, and that brings up the whole, probability. What's the probability that this trap is going to be sprung inside the box with the cat and release its poison and then kill the cat? Well, you'll never know unless you open the box. That's the audit. Then when you close, cat's still alive. Then you close the box, the cat automatically re-enters what's called the probability wave, right? And until you open the box back up, i.e., audit the whole goddamn thing again, until you open that box again, that's the only time that you can collapse the probability wave and find out what actually happened. Audit it again, yeah, cat's still alive. But the second that you walk away from that audit, we have no idea. I don't like this. What I do like is being able to look at my Bitcoin wallet and at that moment, understand exactly how much Bitcoin I have. because its auditability is right there. It is right there. It's being audited every 10 minutes or roughly around. So the other reason I don't like this is that Tether was supposed to be a Bitcoin company. And I don't mind that they're buying gold. That was not the problem. The problem now is that Paolo Ardoino is he a Bitcoiner at this point? Is he not a Bitcoiner at this point? What the hell is Paolo doing? Why is he pushing gold? Is it just because is he one of the weak-minded people that's just jumping on the fad of precious metals go up right now? Because they've been doing absolutely jack shit for decades. Does he know something that we don't? This is the kind of flip-flop attitude that I don't like out of OG Bitcoiners. This is the kind of shit that ruins sentiment. I don't know, man. I don't like this. I don't think it's going to be a good deal. But again, I'm not the billionaire Paolo Ardoino who can make, $40 billion a quarter with like 3 guys and a goddamn phone line. But former Brazil central bank official unveils real pegged real pegged stablecoin with yield sharing. Francisco Rodriguez is writing this one. Tony Volpon, a former director of the Central Bank of Brazil, unveiled BRD, a yield sharing stablecoin tied to the Brazilian currency and backed by Brazilian government debt. Speaking on the Crypto na Real program on CNN Brazil, Volpon said that the token will be backed by national treasury bonds, linking its value to sovereign debt, and aiming to give holders exposure to local interest rates. The central bank's benchmark interest rate is 15%. Holy crap, compared with the Federal Reserve's target of 3.5 to 3.75%. Volpon said that the goal is to make Brazil's high yield environments more accessible to foreign investors. While Brazil's interest rates have long drawn international attention, he said access to these returns is often limited by regulation, currency friction, and domestic infrastructure. Quote, the ability to remunerate stablecoin holders with the interest rates offered by Brazil will obviously be a major draw, especially for institutional investors, Volpon said during that program. The former central bank official also suggested that the stablecoin would support demand for the country's debt, potentially lowering borrowing costs by expanding the investor base. BRD will enter a market domination by Transfero's BRZ, which at this time commands a $185 million market cap. Other competitors, including BBRL with a $51 million market cap, as well as smaller tokens like BRL1, which is backed by a group that includes Brazilian exchanges Mercado Bitcoin and Bitso, and the Celo blockchain native C Real. BRD is looking to distinguish itself as the first real-pegged token to explicitly structure the token to share the yield from the government debt backing with holders. It is not, however, alone. Brazilian startup Crown raised $13.5 million in a Series A round led by Paradigm in December for a similar yield-bearing token, BRLV. And that token, according to a website dedicated to it, has around $19 million worth of reals in circulation. The listed contact addresses show it has just 2 holders. All right. Okay. So this is it's all bullshit. Because here's the thing that CoinDesk did here. Here's the trick. Because I gave you the headline, right? Brazil central bank official. What it really reads is former Brazil central bank official. See, I don't like that. Because it sort of, oh my God, it lends credence because it's the Brazilian central bank. No, it's not. This has nothing at all to do with the Brazilian central bank. This is a guy that used to work for the Brazilian central bank who's going, I want mine too. And shitcoin fest continues to fester across the globe because no one's figured it out yet. It's all a rug pull. You know, there's so many rug pulls that these people are probably getting hungry, so they should go visit my friend Permanerd at sats4snacks.com. That's sats4snacks.com. Sats, the number 4, sats or snacks.com. Permanerd, what is it? Well, it's freeze-dried fruit. Specifically, he's got freeze-dried pineapple. He's got freeze-dried peaches. He's got freeze-dried mango. He's got freeze-dried banana. But he's also got proof of healing Comfrey Salve. So if you've got yourself some cuts, and I'm talking light cuts, not deep cuts. If you've got to go to the hospital to get that shit stitched up, don't use this. It heals entirely too well. And the way stitches work with deep cuts, well, let's just say you don't want to heal the surface before the deeper parts also heal. Okay. So, but for scratches, bruises, sprayings, cuts, stings, itchy stuff, like if you get a little bit of poison ivy on you, this could also help because it reduces inflammation, because comfrey is a magic plant. It just is. It's a magic plant. I got a whole episode about comfrey back in the archives, but you can get your Comfrey Salve as well as a whole host of beautifully freeze-dried, tasty fruit snacks. I'm talking pure to peel organic freeze-dried bananas, pineapples, freeze-dried, peaches, freeze-dried. Oh man, the mangoes are freaking awesome. He's also got like a medley called Pleb Pack, and it's like get the best of all the worlds, because that Pleb Pack contains dried bananas, dried peaches, dried apples, dried mangoes, and dried pineapples. Give your taste buds what they truly desire. 5 pints of sweetness, baby. And you will be buying them in Satoshis, by the way. All of these packs cost 44,000 sats. The Comfrey Salve costs 42,021 sats. Make damn sure you use code Bitcoin and so that Permanerd knows that I made a sale, and Permanerd will be able to figure out how much the sale was worth, and he will pay me sats on the other end. He always does. My vendors in the Circle P always do. The Circle P is open for business. It's where I bring plebs just like you with goods and services to plebs just like you that want to buy those goods and services, but you will be buying it in Bitcoin, because if you ain't selling in Bitcoin, you're not in the Circle P. Let's get back to Tether. Let's see what kind of lame brain shit they're doing over here. Tether-backed Rumble launches crypto wallet, letting fans tip creators in Bitcoin and USDT. Well, why not gold? Because, fucking Tether. But this is from the block. It's written by Naga Avan Namoyo, and it reads, Rumble and USDT have launched a non-custodial crypto wallet embedded directly into the Rumble video streaming platform, allowing audiences to tip creators using digital assets without relying on traditional payment intermediaries. Dubbed Rumble Wallet, the product supports Bitcoin, USDT, and here it is, Tether Gold, that XAUT, at launch, according to a Wednesday announcement. Now, the company said that the wallet enables direct, borderless payments to creators while keeping custody of funds with users rather than a centralized platform. And by integrating the wallet natively into its video sharing service, Rumble aims to remove reliance on ad networks, banks, and payment processors for creator monetization. The wallet's on and off ramps are powered by MoonPay, which offers transactions between crypto rails and traditional payment methods such as credit cards, Apple Pay, PayPal, and Venmo. Rumble founder and CEO Chris Pavlovski said the wallet aligns the company's free speech positioning with decentralized financial tools, giving users and creators greater control over how content is funded and supported on the platform. Quote, we are putting more power into the hands of users and creators so that they can engage with and financially support the content that they like, Pavlovski said in a statement. For Tether, the launch is a step forward towards expanding the use of its wallet infrastructure beyond exchanges and DeFi applications. Rumble Wallet was built using Tether's wallet development kit, marking its first real-world deployment and connecting a large content platform to crypto-native payment rails. Tether CEO Paolo Ardoino said the collaboration brings decentralized payments and non-custodial wallets to a mainstream audience, including users in the United States, and the launch builds on earlier plans disclosed last year, when Rumble said it would introduce Bitcoin tipping for its tens of millions of monthly users with backing from Tether. It also follows broader efforts by Tether to push wallet-based products as a way to expand stablecoin adoption through consumer-facing platforms. Rumble operates a video sharing platform and cloud services business positioned as an alternative to larger tech companies and streaming venues like YouTube. Tether is the issuer of the world's largest stablecoin. Yes, we know. But it's a significant shareholder in Rumble, following a $775 million strategic investment back in late 2024. So they've been part of that for a long time. Since then, Rumble has also adopted a Bitcoin treasury strategy, previously disclosing purchases of the asset as part of its balance sheet management. Beyond payments, the relationship is extended into infrastructure and artificial intelligence, including a $150 million commitment from Tether tied to Rumble's cloud and AI ambitions, as well as its agreement with Northern Data. So there you go. Rumble gets its wallet at the same time that Tether decides to go full shift. And I don't know, I mean, is Paolo going to start dancing on Bitcoin's grave too? Is that what we get to look forward to? Because honestly, I mean, I know I probably sound a little miffed, and I am a little miffed, but it's not really going to matter. Nothing stops these trains. Shit, if you think about it this way, gold and silver, along with some of the other precious metals, go up. Bitcoin's there. All of these metals and Bitcoin can absorb a massive amount of wealth in fiat terms, right? In my view, fine, let them all go up. You know, I've never had a problem with precious metals. What I do have a problem with is these decision makers like Paolo, and I've liked them for a long time. I disagree with this move because it just feels, hey, we got to jump on this metals bandwagon before it leaves the station. It feels like FOMO. And we all know what FOMO will do to a person. You start believing, you're buying in at the very tippy top, and then everything, freaking just goes either sideways or down or whatever. But FOMO is real. And humans will FOMO. It doesn't matter how long you've been in business. None of that shit matters. Do you have a brain? Do you have a heart? Do you have a circulatory system? Well, then chances are good you're going to be succumbing to FOMO at one point or another. I just don't like it when a company as big as Tether does it. It just makes it seem, I don't know, unprofessional. Let's run the numbers. Well, energy is getting kicked in the crotch again this morning. Brent North Sea is down 0.74% to $60.25 a barrel. West Texas Intermediate is down 1.5 to $56.25, although it was actually down 2 full points earlier today. Natural gas, as normal, is acting as the buffer for all these futures. It is the pressure release valve. It is up 6.27% to $3.56. Gasoline is moving sideways, still at basically $1.70 a gallon. Murban crude is down a point to, wow, I just passed $60. It is actually below Brent North Sea, which is not generally normal. It is at $59.97 a barrel, and all the metal rocks are having a bad day. Palladium down 4%. Gold down 0.6 to 44.68 and 8 dimes. Platinum is down 6.5. Silver is down 3.5. Copper is down 3.5 as well. Oh, whatever. Ag is basically mostly green today. Biggest loser is lumber, 0.75% to the downside. Biggest winner appears to be wheat, 1.5% to the upside. Meanwhile, live cattle down 0.8%, lean hogs down 0.8%, and feeder cattle down almost a full point. Meanwhile, over at the TradFi level, we've got the S&P down a third. NASDAQ is moving sideways slightly in the green. The Dow is down a full point, but looks like it almost hit an all-time high. And the S&P Mini is down 0.8% itself. And then we've got Bitcoin, which is at, look, it's recovered a little bit. It's at $91,100. That is a $1.82 trillion market cap, and we can only purchase 20.4 ounces of our favorite shiny metal rock with our one Bitcoin, of which there are 19,972,644.9 of, and average fees per block remain the damn same. 0.02 BTC taken to fees on a per block basis. Mempool's a little full today. Well, full is a relative term depending on which mempools you're looking at. This one has about 35 blocks carrying 74,000 unconfirmed transactions waiting to clear at high priority rates of 2 sats per VByte. Low priority is going to get you in at 0.4. Meanwhile, we are still in zettahash territory for mining. 1.05 zettahashes per second is the current hash rate on the Bitcoin network. That's more than enough for you and me. From Heat Me Up, the very first episode of Bitcoin and in this year of our Lord 2026, I got Paul Cernine with 500 sats says, happy 2026 and welcome back. Thanks for getting us all the news we can use, including your personal takes on the topics this year as well. Looking forward to the upcoming episodes already. Keep up the good work. Thank you, Paul. I appreciate your support. Richard Dick Whitman with 500 says, looking for retard of the day nominees. Any suggestions? I don't know. Pick up a phone book in Washington, D.C., dude. Thank you, sir. With 1,000 sats says, welcome back. And thank you for the encouragement, sir. Welding away over here and grateful to turn pipe fitting into sats. See, that's what we want. Ooh, my friend Tulips. Tulips is back with 1,000 sats says Tulips. Happy New Year. I recently went back to the UK for funs and giggles. And let me tell you, they are fucked. The amount of socialist propaganda there is through the roof, led by people like Gary's Economics. They went all in on the tax the rich shit, and I don't think they are coming back from there. They are also magnificently digital now. Nobody takes cash, and the flow is amazing. Being full contactless is really nice. I was surprised that they did it, given the amount of debanking going on there, but even the Muslims were accepting credit cards. It goes against their laws, something called riba or something. Nobody knew about the jail for tweet scandal, and every bad news we hear from the UK is unknown to them. I've had a good time there, but sadly the UK is tulips and it's going to zero. P.S. Thank God you are back, and thank you for the show, especially the one about tulips. Well, you're welcome, tulips, and I'm glad to see you again. Nick Dose with 124 says, cheers and a Merry New Year. Cycros with 400 says, welcome back. Your sound, or your break, sounds like it was good. Missed your updates. Yeah, everybody's got to take a little time off. Holy shit. Aggie Shoot with 10,000 sats says, 40 to 80 dead, including civilians without shots fired? Okay. This would be my favorite podcast if you kept your political commentary to strictly Bitcoin related. Okay, Augie, apologies. It just means that I didn't have all the information that I needed. It doesn't mean that I don't care about these people. I'm just saying I didn't know that part, because what I'm getting over here in the United States is that it was a flawless operation with no deaths. And it seems to me that what the United States media really means is that the Black Navy SEALs or Black Ops or whoever performed it, that they didn't receive any casualties. Okay, so I agreed. My apologies about that. I started thinking about that this morning. I'm like, surely somebody died. Somebody somewhere freaking died. I'm just not hearing about it. So I do appreciate you lighting me up a little bit on the back end of that one. Let's see, is that it? Yeah, that's it. That's the weather report. Welcome to part 2 of the news that you can use, where the alleged sale of 57 Bitcoin, possible violation of Trump's executive order, but U.S. Marshals say no. Atlas 21 kicks off this side of the Bitcoin and podcast, says, according to an asset liquidation agreement obtained by Bitcoin Magazine, the United States Department of Justice appears to have violated President Donald Trump's executive order by selling approximately 57 Bitcoin confiscated from Samurai Wallet developers through Coinbase Prime on November the 3rd of 2025. Okay, Executive Order 14233, signed on March 6, 2025, clearly states that all Bitcoin acquired through criminal or civil asset forfeiture proceedings shall not be sold and must be transferred to the Strategic Bitcoin Reserve. Well, Bitcoin Magazine reports that prosecutors allegedly instructed the U.S. Marshal Service to sell that Bitcoin valued at $6.37 million, which Samurai developers Rodriguez and Hill had deposited as part of their plea agreement. The Bitcoin were reportedly sent directly to Coinbase Prime address, and then they give the address, which currently shows a zero balance. Senator Cynthia Lummis criticized the move, stating that the United States can't afford to squander these strategic assets while other nations are accumulating Bitcoin. However, after Bitcoin Magazine published the story, the United States Marshal Service denied the sale, telling DL News that they, quote, have not sold the Bitcoin mentioned, and that they, quote, have no idea how Bitcoin Magazine would get that information. The agency added that cryptocurrency liquidations go through a multi-level approval process and that only assets meeting the requirement of Executive Order 14233 are eligible for disposal. The decree signed last March by President Trump explicitly states that government BTC deposited in the Strategic Bitcoin Reserve shall not be sold and are to be maintained as U.S. Reserve assets used to achieve government objectives in accordance with applicable law. The executive order allows the disposal of digital assets only in specific scenarios, such as returning funds to crime victims, law enforcement operations, yada, 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 yada. Patrick Witt, executive director at the White House President's Council on Digital Assets, stated on X that the council is reviewing the matter. So now we don't know if the Marshal Service sold it or not. We don't know where the 57 Bitcoin is. Oh, how great is this? This is like the United States government in spades. Did you lose it? Where is it? Just show us where it is. It's easy to do. Like I said earlier, the whole Bitcoin blockchain is audited every 10 minutes. We know where every single Bitcoin is. So where's the 57 Bitcoin? It went to this Coinbase Prime wallet. Where did it go after that? It's not like it can't be traced. That's what's great about the blockchain. And it's also what's awful about Bitcoin's blockchain is that everybody can know where all the Bitcoin is, where it went, where it came from. And there's no reason in the world that we literally have read 2 stories about the 57 Bitcoin, the DOJ, and the United States Marshal Service, and still not know where the Bitcoin is. Where is it? Where's the Bitcoin? That's all we want to know. And while they're looking for it, maybe they're looking under couch cushions, we've got another one here out of Bitcoin Magazine This time, it's literally about the parent company of Bitcoin Magazine. BTC Incorporated standardizes Bitcoin operations using BTCPay server across all events, payroll, and their treasury. Micah Zimmerman brings us some good news out of BTC Inc. The parent company of Bitcoin Magazine, BTC Incorporated, and the organizer of major global Bitcoin conferences has spent the past several years restructuring its internal operations around Bitcoin native infrastructure, relying heavily on the open source BTCPay server to manage its payments, payroll, and treasury functions. The effort reflects a broader push by the company to operate on what it describes as a Bitcoin standard, using Bitcoin not only as a reserve asset, but as a primary medium for internal and external transactions. Executives and engineers involved in the project say that the goal was to eliminate dependence on custodial payment processors, reduce cross-border settlement frictions, and create a unified system capable of handling live commerce at speed as well as scale. BTCPay Server, a self-hosted and non-custodial Bitcoin payments platform, emerged as the core infrastructure after BTC Inc. evaluated multiple third-party payment solutions, and according to the company, custodial processors introduced counterparty risk and regulatory constraints, while off-the-shelf systems lacked any flexibility needed for global events and payroll coordination. BTC Incorporated first deployed BTCPay Server at its flagship conferences, where the need for high-throughput real-time payments was most acute. Events regularly host tens of thousands of attendees and dozens of vendors. Oh shit, more than dozens, dude. Often in environments with constrained connectivity and strict operational timelines. And using BTCPay's web-based point-of-sale system, vendors were able to accept on-chain and Lightning payments directly to their own wallets. BTC Inc. also used BTCPay's Mark as Paid functionality to record cash and card transactions alongside Bitcoin payments, allowing vendors to reconcile all sales through a single interface. The system was rolled out across 4 major events between 2024 and 2025, beginning with Bitcoin Asia in Hong Kong and expanding through conferences in Nashville, Abu Dhabi, and, of course, Las Vegas. Each event served as an iteration point, with the operations team refining vendor onboarding, payment flows, and reporting tools. The largest deployment took place at the Bitcoin Conference 2025 in Las Vegas, where BTC Incorporated integrated BTCPay Server with Lightning-enabled NFC Bolt cards and optimized point-of-sale infrastructure across the entire venue. Then, on May the 28th, 2025, the event set a Guinness World Record for the most cryptocurrency point-of-sale transactions completed within 8 hours, recording 4,187 separate transactions. BTCPay-powered terminals operated alongside traditional Square point-of-sale systems, which had recently added Bitcoin payment support. BTC Incorporated said the side-by-side deployment demonstrated that Bitcoin native payment systems could function at the same scale and speed as established fiat infrastructure in high-traffic commercial environments. Across all conferences, BTC Incorporated reports more than 5,600 in-person Bitcoin transactions totaling approximately 2.09 BTC in volume. Following the conference deployments, BTC Incorporated extended BTCPay Server into internal finance operations. The company adopted BTCPay's Vendor Pay plugin to manage outbound payments to contractors, partners, and employees, many of whom are distributed across multiple jurisdictions. Vendor Pay allows payments to be batched, scheduled, and tracked, reducing transaction fees and eliminating delays associated with international bank transfers. BTC Incorporated says it has processed more than $1 million in Bitcoin payouts using the system without relying on any intermediaries nor any custodial services. As payment volume increased, the company implemented BTCPay's native multi-sig wallet support to add shared approval controls to treasury management. Transactions now require multiple signatures, with hardware wallets integrated through BTCPay Vault, allowing the company to maintain self-custody while distributing authorization across team members. BTC Incorporated developed a BTCPay server plugin known internally as the Bitcoin Stacker to automatically convert a portion of fiat revenue into Bitcoin. The system routes a percentage of Stripe credit card payments, or rather receipts, into Bitcoin purchases, creating a rules-based dollar cost averaging process. Since launching the program in January 2025, BTC Incorporated said it has accumulated more than 6.5 Bitcoin through automated conversion. The company describes the approach as a conservative treasury policy rather than a speculative strategy designed to build Bitcoin-denominated working capital that can be reused for vendor payments and payroll through BTCPay. BTC Incorporated says BTCPay Server has become a core operational tool across events, finance, and treasury functions, citing reduced payment friction, faster settlement, and consistent self-custodial workflows. The company also contributed operational feedback that informed improvements to vendor pay and multi-sig support, while aligned with BTC Incorporated's long-term view of Bitcoin adoption. The company says the shift has been driven primarily by operational efficiency. All right, so there have been several instances where Bitcoin Incorporated has done some pretty boneheaded things. I won't get into them. I've talked about them on this show before. When they do good work, I praise them. When I think that they do something stupid, I tell you about it. I'm not on anybody's payroll. You know, I mean, I'm a small show. I don't have to kiss anybody's ass right now. But this is good. The fact that they're using BTCPay Server to do this, it's like they're reinstantiating the older sections of Bitcoin DNA. BTCPay Server's been out forever. Anybody can run it. I used to run one. I didn't use it because I couldn't. I didn't have I had the ability to use it, but I didn't have any reason to use it. But I did spin one. I did spin up a server. Right? I spun one up on my old Raspberry Pi. It seemed to work just fine, but of course I really couldn't pressure test it because it's not like I was having to process, hundreds of payments to me a day or something like that, which would have been freaking awesome. But just saying, anybody can run a BTCPay server. BTCPay Server was born out of, I can't remember the guy's name. I can't believe it. But he's the guy that had the famous tweet, "This is lies. I will obsolete you." And he built BTCPay Server in response to, I don't know, one of the bonehead elites, suit-wearing pseudo Bitcoiners that, I don't know, I can't remember what was a payment system, and then they decided to stop taking Bitcoin and started using nothing but shitcoins or something like that. And this dude got pissed. This French guy's like, fuck it. I will sit down at a computer and I will code my own payment system. And boom, BTCPay Server was born. And now Bitcoin Incorporated is using it across all of their stuff. It's good news. It just is. And then we come to dumbass. I see you dumbassing out there. Yeah, you're dumbassing because Bitcoin miners chase AI demand as NVIDIA says Rubin is already in production. I don't know what Rubin is. I hope CoinDesk and Shara Malwa will tell me. NVIDIA CEO Jensen Huang said that the company's next generation Vera Rubin platform is already in full production, unveiling fresh details at the CES tech event in Las Vegas about hardware that he says can deliver five times the artificial intelligence compute of NVIDIA's previous systems, and Rubin is expected to arrive later this year and is aimed squarely at the fastest growing part of the AI business, helping to deliver outputs from trained models. Wang said that Rubin's flagship server will include 72 of NVIDIA's graphics processing units and 36 central processors and can be linked into larger pods containing more than 1,000 Rubin chips. Much of the talk was about efficiency. Huang said Rubin systems could improve the efficiency of generating AI, quote, tokens, the basic units produced by language models, by roughly 10 times, helped by a proprietary type of data the company wants the broader industry to adopt. He added that the performance jump comes despite only a 1.6x increase in transistor count. Huang described AI development as a race where faster processing means reaching the next milestone sooner, forcing competitors to spend aggressively on chips, networking, and storage. That same infrastructure race has been reshaping parts of the crypto market as well. Bitcoin miners have increasingly marketed themselves as power and rack space operators rather than pure crypto plays, pitching their energy contracts, cooling capacity, and data center footprints to AI customers. Hosting AI workloads can generate steadier cash flows than Bitcoin mining during down cycles, especially for firms with cheap power, existing sites, and cooling capacity. But the AI boom also raises the bar. Data center space is becoming a premium asset, and the best sites get bid up by the hyperscalers, cloud firms, and AI startups. That can lift rents. Yeah, no shit, you think? Equipment costs and financing hurdles for smaller miners. In other words, miners that look like infrastructure companies may win, while those that rely on pure mining margins face a tougher 2026. Meanwhile, NVIDIA also highlighted new networking switches using a connection method called co-packaged optics, a key technology for linking thousands of machines into a single system. The company said CoreWeave will be among the first to receive Rubin systems and expects Microsoft, Oracle, Amazon, and Google, well, Alphabet, to adopt them as well. So there you go. Now, am I as miffed about Bitcoin miners going into AI? No, it's completely expected. I mean, sure, I don't like it, but I mean, what are you going to do? You got rack space. You've been like negotiating power contracts for years at this point. Dude, they've got skills. They've got mad skills in being able to contract for power, find out how to physically get that power, then how to manage that power once it's on their pad, how to build buildings, how to do cooling, how to do repair work, how to rack shit, how to de-rack shit, how to connect shit. Bitcoin miners developed mad skills. How on earth can I expect them not to use them outside of Bitcoin? I can't. So therefore, I kind of can't blame them. Especially considering that, well, price is down. The amount of the subsidy that you get when you mine a block is only 3.25 Bitcoin now. It's not like it was when it was, 12 and a half. It certainly wasn't what it was like when it was 25. But we didn't have the kinds of infrastructure around Bitcoin mining that we do today when the subsidy was 25. So the landscape continues to change. Paolo's pissing me off today because the landscape continues to change. Now, with the advent of precious metals being bought up by every Tom, Dick, and Harry that thinks that they actually hold the gold, when what they've done is buy a gold ETF, well, okay, yeah, they're going to get rugged. That gold's been rehypothecated. God only knows how many times. Probably like 10 ounces of gold, or rather 1 ounce of gold being held by 10 people who think they hold 1 ounce of gold. They don't. If you had to split it up right now, they get 1/10 of an ounce of gold. Where's the other 9/10? Well, it's been rehypothecated. And you only find that out, well, during the worst time that you could possibly find that out, when you need to sell it. And that's, generally speaking, not a good time in your life. All right, so who knows? When the music stops, how many chairs are there actually? Because you can think of rehypothecation like that. Let's say you're at a party, you're playing musical chairs, you got 10 chairs, you got 10 people. Well, but you got 10 chairs and you got 11 people, right? So everybody's got to rush to a chair. When the music stops, that's the way the game's played. And if you don't get to sit down, you're out. You're the 11th guy, and there's only 10 chairs. But rehypothecation land, 9 of those chairs collapse when those people sit in them. So instead of one person being booted out of the ring when the music stops and the seas go out and everybody sees who's swimming naked, there's only one guy that's actually sitting in a fucking chair safely. That's why I like Bitcoin. I can look at my wallet right now and I know exactly how much Bitcoin I have because I hold it. I don't have a third party hold it. In the event of this Tether thing and this T or G, whatever PXAUT, whatever the gold backed Tether thing is, how do you know they got the gold? How do you know that the auditor is above board? Who audits the auditor? Who certifies the certifier? Do you know these people personally? Probably not. Do you go out to beer with them? Have they invited you over to their house so that you can tell if they've got bad taste in art or good taste in art? They got a bunch of shit on their bookshelves, or they actually read high quality fiction and nonfiction? Do they cook shitty food? Why am I talking like this? Because you don't know these people. There's no way that you can trust somebody without actually physically knowing the person and not just meeting them once. You've been with them and held their hands when they're crying. When somebody in their family gets sick, they hold you when somebody in your family gets sick. Your friends. You've been through thick and thin together. You know whether you can trust that shit or not. Somebody delivering a PDF that says, yeah, they got the gold. Why do I trust that? Why would you trust that? I like Tether. I like Palo Arduino. I like what he's done for Bitcoin over the years, but this shit's got to fucking stop. This FOMO crap into precious metals, when we know full well that even if you count all the metal bars, are they gold? Or are they polluted with tungsten? How do you know? Are you going to melt them all down and recast them? How much shit does that cost? Are you going to drill them all? How much does that shit cost? You know, how much does every assay of this shit cost? You can't, even the guys, like, let's say you can trust the auditor, and the auditor physically goes to Palo's vault and walks in and starts counting gold bars. Well, we'll take this one and we'll flatten it out and we'll do the assay stuff and run it through an acid bath and do whatever it is that they do. And then we'll just assume that all the rest of the gold bars here are exactly the same as this. That is not an audit. There's only one way to audit shit. You melt the entire vault load of precious metal down together. You mix it while it's molten. And then you take a sample of it and you assay that shit, and it better be 99.999% gold. The amount of money and time that would take makes a full audit of anyone's gold holdings ridiculous to perform. Yet we do that every 10 minutes with Bitcoin. You can think of every block passing in and out, through the Bitcoin time chain as a complete melt of every Bitcoin in existence. An assay of that mix that says all this Bitcoin is actual Bitcoin, and then it's recast into little coins, big bars, great big massive cubes. And it does it every single 10 minutes. You can't do that with any other asset. I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.